Hello, everyone. Welcome back to another market analysis. In this video, we are diving deep into the GBPUSD market dynamics to prepare for what could be a pivotal trading week ahead. Looking back, last week was huge for the GBPUSD. We saw the pound hit its highest level against the US dollar in 2.5 years, fueled by a sharp drop in US consumer confidence. As you can see on your screen, the technical setup from last week comprised an ascending channel and price holding strong above the 1.37 was enough for us to maintain that bullish bias. And of course, if you remember vividly, at the beginning of last week, we saw price drop significantly back into our week's key level at the 1.37 area. And for those of us who are part of the Forex Morning Mastery on Monday session, remember we positioned ourselves around this area after identifying buy pressure from that zone on the lower time frame, and we were lucky enough to capture the whole 160 pips move all the way into the 1.34350 area. And congrats to everyone who cashed in on the gains. Well, moving into the incoming week, things are getting interesting. The pound's momentum may be at risk as we are facing a potential turning point. Buyers appear to be facing a new barrier at that 1.34350 area. As you will see here, every time price comes into that area, we see how sellers come in pushing price back to the downside. And this area is incredibly sensitive. I will be shedding more light on this in the technical analysis, and we could see a sharp drop if markets start pricing in deeper interest rate cuts from the Bank of England. Meanwhile, on the other side of the pond, that is in the United States, the recent slowdown in inflation is not enough to guarantee that the Fed will cut rates by 50 basis points in November. And in fact, judging from last week's Fed official speeches, remember we had a bunch of them from last week, they all remain confident that inflation will return to the 2% target. In fact, the US economy is strong, the job market is booming. It's a pretty solid picture for the US dollar going forward. However, it is essential to point out that the market expectation for Bank of England's interest rate might be a bit overly optimistic. This could lead to a significant drop for the British pounds, especially with so many traders betting on continued strength. And if some of that better than expected US data keeps rolling in, well, that could really trigger a massive sell off. So the big question is, will the pound strengthen or weaken against the dollar in the coming weeks? To answer this video, we will be breaking down the chart, spot the trends, key levels, and structural patterns to help us figure out where price might be heading. Stick around with me as we together explore the potential big moves waiting to unfold. Remember, this presentation is designed basically for educational purposes only and not financial advice. Always consult a professional financial advisor before making any investment decisions. With that said, let's jump right into the chart and see what opportunities we have in store for next week. Now, my first point of contact is going to be on the daily time frame where I have taken into account the character of price action for over 2.5 years so that we can have an holistic perspective into what has really been going on in this particular market. And I also want to further emphasize that sensitive area which I was talking about around the 1.34350 area in my market highlights to make us have a deeper understanding into what is going on in this market. Now, after taking all of this into account, that is going to as far back as the year, what year is this? 2009, actually. First of all, you will see how that level I talked about, that is the 1.34350 area, had been a strong selling or buying niche at some particular point in time in this time frame. Look at this. Look at how it has always been. Look at this was a selling niche at some point, as you will see, and then it turned out to be a buying niche at some point. Then we saw how price broke down the structure again during the month of February of 2022, and since then price action had remained below the structure, and not until last week we saw price back into that particular area. Then, besides the sensitivity of the 1.34350 level, we can see that we also have a descending trend line after capturing the series of lower highs since 2008. And this trend line here beautifully shares a confluence with where price action is currently at, making it a crucial moment for us, as depending on how market reacts to this level will determine if we are going to be buying or selling the GBPUSD for this week. Now, with this information in mind, how do we intend to navigate this currents from this particular area next week? Well, in order to navigate this area, I have a simple trading setup on my 4 hours time frame. But before we go into the detail on the 4 hours time frame, let's turn our focus to the upcoming economic events that could shape market sentiment next week. By reviewing the economic calendar, we can pinpoint how these upcoming events will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. Now, based on the asset we are looking at, we will be focusing on high impactful events from both the United States and the United Kingdom economic docket. And after taking this into account, the first impactful event we are looking at is coming in on Monday, September 30th. And the first one here is the gross domestic product quarter 2 from the United Kingdom. This is a data expressed in annual growth rate, measures the total value of goods and services produced by the United Kingdom economy. Then on that same day, we are looking at the Fed chairman's speech, which is something everyone will be looking forward to, as his remarks will be providing the market with insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Then on Tuesday, October 1st, we are looking at the ISM manufacturing PMI from the United States, a key economic indicator that measures the health of the manufacturing sector in the United States. Then on Wednesday, October 2nd, we are looking at the ADP, a monthly economic report that provides the number of new jobs added in the US private sector. Then on Thursday is the Bank of England's monetary policy report hearings. For those of us who are not familiar with this is a meeting where Bank of England officials present their economic outlook and monetary policy decisions to the UK Parliament. It provides insight into the bank's future policy moves, for instance, interest rate changes, which can impact the value of the British pound in the Forex market. And traders watch this hearing closely as the tone and details can lead to market volatility based on shift in monetary policy expectations. Then on that same day, we are looking at the ISM Services PMI, a report that measures the performance and expectation of the service sector in the United States. Then on Friday, we have labor oriented data from the United States in the form of the average hourly earnings, a data that measures a change in pay for workers in the US, and it's considered to be a key indicator of inflation too. Then, simultaneously, we have the non farm payroll report, a key economic indicator that shows how many jobs were added or lost in the US economy. And of course, this report excludes the agricultural sector. So these are the high impactful event we are looking forward to. And of course, the anticipation of this event will reflect on the chart as structural patterns that we can actually use to help us strategically position ourselves for the next move. Now, talking about positioning ourselves for the next move, we shall be going right down into the 4 hours time frame where I do have a simple trading setup to guide our decisions next week. Now, what I did on the 4 hours time frame was to take into account the character of price action in the last 2 to 3 weeks. And if we do that appropriately, it is quite clear that the market has been on an uptrend scenario. And after connecting the series of higher lows, we have a beautiful ascending trend line to help us navigate this current market structure. Now, with an ascending trend line in place, as long as price remains above them, we'll continue to look out for patterns and structures that support the idea of buying. However, after taking into account the recent activities throughout last week, we saw that despite the strong bullish momentum, we found a barrier at that sensitive 1.34350 area that I have been talking about since I began this video. You see, this area here had continued to negate all attempt by buyers to break out of that structure, making it a strong selling niche. And with the way things are going, the question here is, will buyers be able to gain enough momentum to break out of the structure? Or will the continued selling pressure here lead into a situation where price will break down this ascending trend line for the first time in about 2 to 3 weeks? Now, to help me navigate this area, I do have my key level for the coming week. When price remains above that key level, we continue to maintain a bullish bias. But if price breaks down the key level, then we want to start considering selling. So my key level for next week is going to be at that 1.33700 area, which shares a beautiful confluence with that ascending trend line. And in fact, if you look at what happened at the end of last week, we saw how price closed exactly along that level. Now, for next week, I want to see how the market will react to this confluence between the 1.337 and the ascending trend line, where continued buy pressure above the structure will help me maintain a bullish bias. A breakout retest of the 1.3435 will give us more opportunities to maximize the potential of that bullish move. However, if price breaks down the 1.337, price would also have broken down the ascending trend line, welcoming selling ideas. And if I'm able to identify selling pressure below the structure on my lower time frame, I will be willing to join a downtrend move. Here you have it, my in-depth look at the GBPUSD for the week ahead. And trust me, I will be with you in the comment section of this video on Monday morning after monitoring how our price will be reacting to this confluence. Then I will be giving us an update in the comment section below. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me, and of course, it also helps the YouTube algorithm promote the video to a wider audience of traders who may find the content beneficial. And if you haven't yet, consider subscribing for more insights, weekend market preps, and regular updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.